No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vacharajani and this is a show where we get all your stock-related queries answered. For viewers you're tuning in, you can either give us a call or send us your queries on the WhatsApp numbers that are flashing on your screen up there. Before we start doing that, let's take a quick look as to how the markets are doing. The Nifty 50 is trying to hold about the 23,900 levels, up 1.2% as we speak, but fallen over 100 points from its day's high point. The Bank Nifty is trading trading around 0.8% higher, 0.9% higher around the 57,300 levels. Let's pull up the Nifty 50 heat map and see as to what are the counters that are doing fairly well. You have Trent leading that pack up 6%, followed by something like a Shriram Finance, Eternal, Eicher Motors, Interglobe Aviation, Maruti Suzuki, Mahindra, Bajaj Finserv, etc. doing fairly well. It's good to see more greens on the screen than reds for a change. You have NTPC, Bajaj Auto, ONGC that are under pressure though on the flip side. Let's try to pull up the sectoral heat map and see because the sectoral heat map suggests that realty is what is making a comeback after after the US-Iran peace treaty, and you have 4.3% of an uptick on Nifty Realty. Nifty Auto up 3% as well. It's only the pharma, the defensive play is now playing opposite of its part, and you've seen a downtick of around 0.6% on the Nifty Pharma. Let's try to pull up the mid cap 150 and the small cap 250 as well, both outperforming the benchmarks. The mid cap 150 up 1.8% and the small cap 250 up 1.6%, and that's with regards to where the markets go. Let me also welcome in our guest for the day. We are joined by Vishnukant Upadhyay, who's the AVP Research at Master Capital Services, joining us now. Vishnukant, a very good afternoon to you. I'll start up by taking the first query that we have. And this is from Reha, who's writing us from Bengaluru, asking about Flare Writing Industries, and she wants to know if this is a good counter to invest in from a short-term perspective. In fact, she's talked about two counters, Flare Writing or Fujiyama Power Systems. Anywhere where you think charts are looking more attractive?
Hi, Mama. Good afternoon. Well, so Flare Writing is like a falling knife. It's after breaking down for its a very crucial horizontal support that is aligning somewhere around 276. Prices are continuously falling and making a lower highs kind of pattern. So I think this fall will continue till 250 sort of level. So it's a clear cut avoid counter. Do not look at this. And second counter is a Fujiyama, I think, right?
Fujiyama Power it is. Flare Writing and Fujiyama Power.
Yes. Yeah, Fujiyama Power is, looking moderately, positive. In fact, the prices are trading well above its all key moving averages. So currently it is testing a 21-day exponential moving average. So this could be a good buy with keeping a stop loss below 289. On the higher side, I'm expecting 340, 350 sort of levels can't be ruled out in a very short term.
Okay, the next one that we have is on PNB Housing. This is coming in from Pradeep Paul. He is holding 50 stocks at the levels of 950 rupees and wants to know if he can continue to hold this from a short-term perspective. Again, your view on the charts on this one, Vishnu?
Yeah, definitely. He can hold the counter with a potential upsides toward 1095, while on the lower side, he should maintain the trailing stop loss below 990.
By the way, for answering all your fundamental questions, we are now joined by Pankaj Pandey, who is the head of research at ICICI Direct, joining us now. Pankaj, a very good afternoon to you. The next one that we have is from Joes, who's writing us and asking about BASF. He's got 10 odd shares. Sitting on a loss right now, he's bought it at the levels of 5316. Wants to know if he can continue to hold this one or not. Vishnukant, your view on the charts for this one?
Definitely, the stock has started to form a double bottom kind of pattern. The recently formed low is little higher from the previous. So it is, apart from that, the stock also briefly penetrated the 21-day exponential moving average. The volumes are also very nice. The stock is trading with a gain of around, 3%. So it's clearly indicating that the short-term bottom has been formed and stock is now gearing up to head towards 3,800 sort of level. So yes, he can hold this.
Okay, the next one that we have is on Reliance. Our viewer is holding 250 odd shares and wants to know if we can continue to hold this one from a long-term perspective or not. Pankaj, your view?
I think our sense is that Reliance should be held from long-term perspective. Our sense is that potential Jio IPO also can unlock further value. Because last time when the tariff for hike in telecom business was in July 2024. So one round of tariff hike is due, and also the upcoming oil and gas business is expected to sort of do well with crude oil prices sort of correcting. And I think the energy business also is shaping up very well. We'll have a lot more clarity in the second half. Sum total Reliance is attractive at current levels.
Okay, the next one that we have is from Vijay, who's writing us from Chennai, and he wants to know the short-term target of Fortis Healthcare. Vishnukant, your view on the charts for Fortis Healthcare?
Well, so Mahima stock is, trying to just break. It's a crucial horizontal, resistance. A few days back, prices tried to, break that level, but in today's trading session, prices are now down with a loss of around 1%. So I think yes, it's a moderately sustaining that level, but in days to come, the expectations will clear whether the stock will hold that levels or not. But as of now, as the stock is trading above the 21-day exponential moving average, so yes, he can hold the position and maintain the stop loss below 960.
Okay, the next one that we have is on SJVN. Murli from Hyderabad is holding 100 shares since the past 5 years. Let's try to pull up the chart and see as to where it is trading at. Okay, 73, he's bought at the levels of 39. He wants to know if they can continue to hold this for another year or should he book his profits. Pankaj, what's the view on SJVN?
So largely, see, when we look at hydropower players, there is always a challenge of long-term execution risk. And which is why something like NHPC and SJVN sort of struggle to deliver on a consistent basis. What we prefer is typical power players like, say for example, L&T. I think these are better players to sort of look at in the power space.
Okay, all right. So that's the view coming in on the entire, of course, power space. The next one that we have is on Stalin India Fluorochem. Sudhakar from Bengaluru is bought at the levels of 175. Currently, let's try to pull that up, trading around 192. Should I hold book profits is his question. Vishnukant, your view? Stalin India Fluorochem is what I'm talking about.
Well, so Mahima, he can hold the stock because the stock, formed the inverse head and shoulder kind of pattern and decisively trading up the neckline resistance. So I believe this up move is likely to remain intact with a potential upgain towards 220 sort of levels. So yes, he can hold the position with maintaining his stop loss below 178.
Okay, the next one is on Bajaj Electricals. Pushpashet from Pune bought it at the levels of 306. 846 shares is what he's holding. He says he's bought it on Friday, but he's not mentioned whether he's looking at this from a long-term perspective or a short one. But Pankaj, overall, any view on Bajaj Electricals?
I think typically fans, we have seen a decent amount of disruption. Now things are sort of looking up. But I'll prefer a more diversified player, something like LG Electronics, or you could have players like Amber. I think air conditioner is one of the few categories where we will continue to see double-digit kind of a growth. And with penetration at about 30% kind of a level. So you will have players like Amber or LG. I think these are better players to hold in the entire consumer durable space.
Right, so that's the view coming in on all of these names. But time to slip into a very, very short break. Don't go anywhere. We'll be answering more queries on the other side of the break.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of
Welcome back. You're watching Ask Profit. It's time for our rapid fire round. Pankaj as well as Rishika, you both know the drill. Try to keep your answers as short as possible. The first one is on IGL. Aarti from Bengaluru has bought it at the levels of 152. Wants to know whether she can continue to hold or not. Rishika, your view on the charts?
Yeah, hold the position.
Okay, the next one is on Shriram Finance. Srinivas from Chennai wants to know if we can continue to hold this from a 3-day perspective. He wants to know if this is the right time to enter. Vishnukant, would you recommend that?
Yeah, definitely. The stock is getting momentum, and I believe 1070, 1080 sort of levels can't be ruled out. Yes, hold the position.
Okay, Vari Renewables. Is this the right time to enter from a next 3 to 5 years perspective, Pankaj?
So my sense is it is better to watch out for how the strategy of big players like Reliance pans out, because they're investing on the entire value chain, and which is why I think some of these players face some challenges. So I think till the time Reliance cards are not out, I wouldn't recommend chasing some of these names.
Okay, CG Power is the other one. Is this the right time to enter from a long-term perspective of 2 years, Pankaj?
So I think this is a good stock to be into. Only thing is valuation is in excess of 90 times. But this company is a good play on the transformer side. On top of it, I think semiconductor is something as a business which should sort of shape up well. And I think this company is also a play on the railways propulsion business. So I think combined basis, this stock is good to hold.
Got it. Samvardhana Motherson is the other one. Our viewer Sriram Raghuraman has bought it at the levels of 75. 600 shares is what he's holding. From a 1 year perspective, Vishnukant, a good hold?
Yeah, definitely. For the target of 180, 185, one can hold the position with trailing stop loss below 140.
Okay, Ashok Leyland from a medium term perspective, a good entry point, Pankaj, is what our viewer is asking. Quick view.
Absolutely, because I think one, they got impacted because of the higher rubber prices, and on top of it, freight also gets impacted because of higher diesel prices. Since crude oil prices started to correct, I think we would expect the stock to do it.
All right, okay, that brings us to the end of this rapid fire round. Pankaj as well as Vishnukant, thank you so much for taking out the time and helping us answer all those stock related questions. But with that, viewers completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trend.
Hi, thanks so much for joining in. You're watching India Market Close and the bulls stay in control. That's how it looks on the screen right now. Take a look at the Nifty 50. We're hovering very close to that 23,900 mark. We did break past 24,000, but we failed to hold it very early on in the session. But 291 points, close to 800 points in the span of 2 sessions. So that's certainly something that is positive. Friday and today, of course, we've come off the high point of the day. But as you see at the bottom of the screen here, the advanced decline ratio does not look half bad. We'll come to that in just a bit. Pull up the intraday chart for the Nifty 50 and let's talk about this, right? So 23,900, we've come off from the very peak that was maybe around 10:30, 11 or thereabouts. And we're still trading with gains of about 1.2% or thereabouts. Pull up the heat map for the Nifty 50 and let's take a look at what is buzzing. You will have some of the high beta counters and specifically Shriram Finance that does incredibly well when the market is buzzing. It's up about 5% at this point, but quite a bit is also to do with the CV cycle, and we'll speak about that because that's a sector that we've got a fine focus on today. Trent is doing well for itself. Eicher Motors, Eternal, Maruti Suzuki, all with gains of over 4%. And you have the likes of Bajaj Finserv, Indigo, which is a key beneficiary of crude oil prices coming off quite substantially, gaining about 4%. But there are several counters that have come off the high point of the day. NTPC, one of them. Bajaj Auto, certainly. But HDFC Bank coming off quite substantially from the high point of the day. ICICI Bank down over 2% from the high point of the day to now trade in the red, down about 0.6% is having a bearing. So pull up the Bank Nifty actually, because that is going to be one of the key talking points. The Bank Nifty intraday, it's come off from the high point of the day, still trades with gains of about 0.9%, but it is underperforming the benchmark right now. Pull up the broader markets as well, the mid-cap index as well as the small-cap index. 1.8% here, the small-cap index trading also, I would think, with gains of about 1.6%. There you go. But really, the Nifty Next 50 is doing particularly well today. In fact, it is at an over 1-year high. This particular index is gaining over 2%. So from that large-cap cohort, it's close to 3% at this point. So it's come off the high point of the day, which was hit very early on, but the Nifty Next 50 doing particularly well. Pull up the sectoral heat map just at the end of this to drive home the point, and quite a bit of green on the screen. Pharma and healthcare, the underperformers, but realty, and you've often seen this when the market does well, realty does well as well. Consumer durables, auto as a pack doing quite well. We'll talk about some of that in just a bit. But let's talk about some of the key talking points today. The Nifty 50 gaining for a second day in a row, and you have gains of over 750 points in that time frame. Post today's move, the Nifty 50 is now above its 50-day moving average, and analysts are saying today's move is led by short covering. Understandably, some of that came through on Friday as well. 24,000 continues to act as a strong resistance. The maximum open interest concentration sits at that 24,000 strike. The Nifty is now seeing support around 23,850 to 900, and the Nifty Bank is trading above all key daily moving averages. The resistance for this index is seen between 57,800 and 58,000. Support seen between 57,100 and 57,200. Neeraj Shah with me in studio. Neeraj, you will take this. Relatively, strength has stayed through the day, and I think that is going to give the bulls some heart.
Absolutely right, Alex, and you summed it up really well, that had it not been for those two banking names, the thing would have been even better, if you will, right? So in some sense, you go to admit, I don't want to get into the minutiae of the specific stocks because Alex has enumerated almost everything that is moving or not moving, if you will. So maybe it is a good idea to take it to our guests to try and understand what to do in a scenario like this, right? Now that there is a first bout has happened, the market has digested and now is waiting for June 19. What to do until then? And if it does, the conflict easing off or the peace deal does see the light of the day, what happens next? Well, I don't anchor this show that often, but it's an absolute delight to have Hemen when I'm anchoring today. Hemen, great having you. Thanks so much for taking the time out. This is Neeraj here. Good afternoon. What do you do, Hemen? Do you initiate any fresh trades this afternoon, or now do you wait for the deal to get signed, if at all, on June 19th?
A very good afternoon, Neeraj. Thank you for having me on the show. It's such a pleasure. Well, coming back to your question, does one do anything now? I think one can do in a very limited fashion. Let's say you want to buy 1,000 shares. You can buy 1/3 now and wait and see how things pan out. We have seen a humongous gap as far as the Nifty is concerned. Time and experience has shown that such big gaps in key indices don't remain uncovered for too long. If they do, I think it would be great for times to come, but I have my doubts. So one can wait for the gap to get partially covered up and, like you said, act on the further after the 18 where you might not get a chance. The VIX is finally below 15 after a long time. So everything seems fine. We are at resistance level that are gaps. So one has to be very selective. Like I said, impossible to predict what's going to happen on the 19th. Hopefully it happens. But like I said, one can start nibbling a bit, 1/3, 1/4 stocks which are fundamentally good, which are sort of on attractive valuation. One can start nibbling over there, because impossible to get tops and bottoms in a market which is so volatile, Neeraj.
Yeah, absolutely. Heyman, a comment on a few of these large cap stocks, and good afternoon to you, Alex here. And I'll ask my team to kind of pull up that metric. It might move a few tenth of a percent or a few basis points here and there. But the stocks, the large cap stocks from the benchmark Nifty 50 cohort that have come off the high point of the day pretty sharply today. Take a look at this. So Asian Paints dropping close to 3% from the high point. NTPC, Tata Motors, specifically ICICI Bank and HDFC Bank. So HDFC Bank dropping about 2%, ICICI Bank about 2.2% from the high point of the day. So Heyman, that momentum clearly obviously missing from the large cap counters. So therefore, would you hold your horses before you jump into this? Ultimately, a lot of fundamental analysts also calling out the broader markets. And they're saying not necessarily seeing so much attractiveness in the large cap. Other technicals also pointing to that.
Hi, Alex. Yeah, I think what you say sort of synchronizes what one can see on the technical parameters. In fact, some time back, we had seen the Nifty 100, Nifty Midcap 100 index posting a fresh all-time high. Very few indices had. I don't mean sectoral indices, and the Nifty was far away from all-time high, and the Nifty Midcap 100 did. So I think, yes, money has flown towards quality, or let's say reasonably priced mid-caps and small caps. Mainline stocks, a stock that you mentioned now for Asian Paints that you spoke about, Alex. Now the stock has moved from 2100 to 2832. So stocks which have had a run-up, crazy run-up, I think there was going to be a reality check, and I think that is what has happened. And if you're talking about Tata Motors passenger vehicle, I mean, once again, we have seen some up moves come in, and it's more script specific rather than anything else. So I would say what you say makes sense. Some of the mid caps and small caps have done well. I feel they are still going to do well compared to what the Nifty is, Alex.
So let me quickly ask you then, what are the stocks that you're finding attractive? Do you have any picks this afternoon?
Yeah, firstly, I have a buy call on Avenue Supermarkets. It's more of a trading bounce. We've, Alex, come off from a high of almost 46.25 to 39.50. Stock is oversold. There are positive divergence emerging on the charts, and plus there are crossover buys by some of the mechanical indicators. So one can buy Avenue Supermarkets at 4100, stop loss 4000, target 4300. Second one is Bharat Dynamics Limited, Alex, BDL. Logic is almost same. Oversold, stock has come off from 1480 to 1160. At medium-term supports, positive divergences, crossover buys. Okay, different sectors, but the pattern or the technical setup is very similar, Alex. So one can buy BDL at 1220, stop loss 1190, target of 1280, Alex.
Okay. By the way, at the bottom of your screen, you're seeing some data points come through, the Made Trade data, and you should keep an eye on this, particularly from the perspective of exports that have come through. Exports have actually grown to $863 billion at this juncture. And of course, this is going to be absolutely critical from the perspective of the balance of payment. The trade deficit currently stands at about $28 billion. It's going to be absolutely critical to look at the gold imports for the month of May. Goods exports at 45.2, goods imports at $73.4 billion. So merchandise exports gaining as much as 18% to $45 billion. We'll get you the key takeaways from that in just a bit. For now, let's turn to a stock that we've tagged as the stock of the day. And it's not one of the high flyers. In fact, it is a stock that is not doing particularly well. It is Aurobindo Pharma. And we listed this stock for you before the start of trade. We said this could be a stock that could take a battering today. And that's because of a negative observation for one of their facilities. Hiral joining in to tell you about the criticality of that facility, Hiral, and what it means to be tagged as OAI.
Okay, it's going to be interesting to see this one, because this is not the first time where Aurobindo has been caught on this kind of a classification. Now, if you pull up the stock as well, trading nearly at the day's lowest levels. Eugia Unit 3, that has been classified as OAI, and this inspection was conducted actually between January 27th to the 6th of February, and it was concluded with almost 11 observations. Now, what is going on over here? There is a regulatory standstill that you're looking at because all the existing approved drug supplies could continue from here on. But what happens is no new drug note they can get until the US FDA is satisfied with corrective action. So any future pipeline that comes in at risk on the back of the OAI status. Now, Unit 3 also is a major, I mean, if you talk about the second Eugia facility, that also received an OAI tag within a month. That's what you're looking at. And if you talk about Unit 3, it serves as a major hub for high-margin sterilite injectable exports to the United States. Now, these are repeated headwinds that we're talking about. First, we mentioned that the second Eugia facility that is receiving this OAI status, and a similar classification was received at Kolthur Village injectable facility that happened back then in May 2026. Now, what the company has come out and said is that the classification will not have any immediate impact on its current operations or financial performance. However, they've not really stated anything in terms of the future pipeline. Bernstein has maintained a market perform rating. They have a target price of 1,498. What they're saying is that quality execution falls short. There is near-term pain, and the future capabilities, however, are strengthening over here. The returns are unlikely to materialize meaningfully until post FY29. You're talking about what? Almost a 2.5 year gestation period, and they're expecting a base case of continued partial supply, a freeze on approximately 35 ANDAs that could be pending from this new site, which is an impact of almost 3 to 3.5% in terms of your FY27 EPS drag. That's the reason why majorly you're seeing this kind of pressure. But if you talk about analysts, 28 analysts tracking this counter, 19 still have a buy rating, 5 hold and 4 sell. And if you have to talk about a consensus upside, they are still seeing a 12.5% return potential from this point of time. So the question over here is, current impact in terms of financial is negligible, but your future pipeline is something which is at risk, and that's the reason why the stock is reacting negatively.
Okay. Thanks for that, Hiral. Well, yeah, it's ironical that on a day which is like this, the stock of the day is a stock which is actually down, but a large one at that. By the way, some important flashes, and I think Alex had marked this in the morning, but just extending this as well. Okay, I think we just lost them, but Iranian state media is saying that, right here on your screen, that free Hormuz transit will stay for 60 days. This is great news for oil, this is great news for currencies, etc. Alex, and under the US pact. So this is now all sides, not that they had not done it earlier, but all sides saying literally the same thing, if you will, and which is what should give some more confidence to the market.
The only worry and the only issue is what Israel does in this time frame, because ultimately they've gone on record to say that they are not party to the US-Iran talks. They were not involved, and also what happened on Sunday, which is the attack on Hezbollah targets in Lebanon. And so, therefore, the hope is that between now and when the deal gets struck or signed on Friday, on the 19th of this month in Switzerland, nothing should take place. That's the absolute critical point.
You're absolutely right. Well, they have elections coming up as well in the month of November, so it should be interesting to see that. Okay, Mayuresh Joshi is with us too. Mayuresh Joshi, thanks so much for joining in. Are you a buyer, Mayuresh, today, or are you waiting for the dust to settle? Because by the time you get complete clarity, the market may be even more higher.
Afternoon, Neeraj. I think we were buying into selective pockets even before, and our own sense is that looking at the construct in terms of the tailwinds that the markets will not get, in terms of the West Asian resolution that is probably now happening, and crude prices expected to come off, the second order inflation effects on input costs specifically for a whole host of companies will probably gradually start calibrating downwards from the second quarter onwards. Having said that, I think quarter one will still be relatively tough in terms of the absolute numbers itself. Markets will look far beyond that. Having said that, I think select domestic engineering, construction, manufacturing companies is something that we have taken a fresh look at, and fresh positions as well. Our own sense in terms of specialty chemicals, a few players within that seem to be interestingly placed as well. And therefore, I think certain pockets, in our opinion, where earnings, Neeraj, might hold up and might actually accentuate with the resolution probably happening in terms of the West Asian crisis. I think these 2 or 3 pockets might actually continue to well. And yes, I think we've even bought some today as we speak.
Okay, all right. Mayuresh, we'll come back to you on a couple of aspects of what you just spoke about, but I want to focus in on a cohort of stocks that is doing particularly well, and I guess it can be attributed to crude oil prices coming off quite dramatically because it's good news for the CV pack as a whole. We will talk about that in just a bit, but before we do, I do want to ask Hemant what he thinks about the auto pack, because ultimately you have a Tata Motors, you have Ashok Leyland, and I'm talking about the CV players here. Eicher is doing particularly well in trade today. Would you buy into any of these names?
Alex, if you look at, I don't have enough data on Tata Motors commercial vehicle to take a proper call. But if I look at Tata Motors passenger vehicle, I think it looks very promising. It's been some time correcting. Downside appears limited. I believe there's a longer term turnaround on the charts, Alex. So if you have a, let's say, a 2-year point of view at this point in time, I think Tata Motors passenger vehicle either screaming by on declines. Maruti, okay, you spoke about CVs. If you look at Maruti is on the cusp of breaking out from an 8-week consolidation phase. So many of the auto stocks, like you mentioned, are looking good, and even beyond the CVs, Eicher broke out. So many of these stocks are looking good. And just a small thing, digressing from your point, real estate is moving. I believe that could be the sector to watch for the next couple of years, Alex.
Yeah, it certainly is the top gainer in trade today. You know, speaking of buzzers, there's a particular stock that is buzzing on not necessarily absolute confirmation of something taking place, but there are murmurs. Schneider, there's a pact with Foxconn, and that deal with Foxconn is for AI data center solutions. There is a conversation about production of integrated AI infrastructure that begins later this year. They are set to jointly develop AI racks as well as power and cooling systems, and the focus is on faster deployment and lower operating costs. Foxconn recently announced AI partnership with Intel and SK Group, and AI infrastructure emerging as a key growth pillar for Foxconn. Now, the important aspect to bear in mind is that Schneider Electric is a global parent of the India-listed Schneider Electric Infra. What you're seeing on the screen is Schneider Electric Infra, and the expectation is that global tie-up can have a positive spin or tailwind for this entity as well. It's seeing considerable buying at this juncture, and it's up as much as 10%. It is at upper circuit as we speak right now. Right, but let's focus in on that CV pack. And I think it's not just the manufacturers, it's not just the OEMs, it's also the financiers that are doing particularly well. Whether you talk about Shriram Finance or you talk about certain other players as well. So let's bring in Sharad to talk about why this might be the case. Sharad?
Well, it's a pretty interesting take actually. It's not only CV players, but it's the CV financiers also. And over the last 2 trading sessions, we have seen a good up move happening. It's of course the basket is doing well in trade. Last 2 days, Tata Motors CV, Ashok Leyland, Chola Finance, Shriram Finance, all going up between 13 to 14 odd%. But why are they gaining? Answer is the crude prices expected to fall more on the US-Iran peace deal as it's nearing. But why does it matter? Remember that almost diesel constitutes 30 to 50% of the total operating costs for the fleet operators, and this may bring greater certainty to a fleet purchase decisions and provide a flow to the demand. Now, the other tailwinds for the CV sector, this includes a sustained government capex infra, replacement demand, at least on the aging fleet, improvement in the purchase visibility and support demand flow, and lastly, a higher healthy utilization levels also coming in. Let's look at the CV financing exposure, especially of Shriram Finance and Chola Finance. Largely, you can see 45 to almost 48% of the total portfolio is coming from the CV financing views. Also, the next 12 months return potential is also up at least double digit for all the 4 stocks which we have mentioned, be it the financing or the CV players?
Well, thanks, Sharad, for putting that into perspective. Dhruv Joshi, analyst at Mirae Asset Sharekhan, joins in right now. He tracks this space closely. Dhruv, good afternoon. Thanks for taking the time out. This is Neeraj here. Is the crude price correction and, of course, the overall optimism around the peace deal the single biggest reason for the rally in the auto and the auto finance space today, or are there some other parameters as well?
Yeah, hi, good afternoon, Neeraj. So this was pretty much given in the whole industry that somehow, the increase in crude oil prices was a kind of a deferment of the large fleet operators that are the primary customers of the CV players. So we did see in the month of April and May that there was some slowdown in the overall dispatches from these CV players, primarily because fuel being one of the major costs for these large fleet operators. What happens is that any increase actually tends to push back deferment. Ashok Leyland, on the other hand, had mentioned that there will be some deferment, and once that's the situation kind of resolves, they should see some pent up demand. So one major factor is, yes, the correction in the crude oil prices.
Dhruv, hi, good afternoon, Alex here. So, but I'm just trying to understand pecking order, right? So if you look at this pretty wide cohort, and if you look at the retail demand in the passenger vehicle space, based on what we've been hearing from the Federation of Automotive Dealers, even in the month of May, it was a pretty good month. The numbers are looking good. So despite the external shocks that you've seen, there is demand on ground. So if you look at the pecking order, would you look at the PV players and say this is the pocket that you would focus on, or would you look at CVs, or would you look at auto anchs? How would you play this?
Yeah, hi, good afternoon. So the pecking order which we would definitely look into is the new age ancillaries, primarily following the trend of higher per wallet share, basically a premiumization trend, content per vehicle kind of theme that these auto anchs would follow, and then maybe trickle it down to a similar level of growth in that we would see at the PV players. If we were to look at the first quarter of the overall auto industry, the demand scenario was pretty much prevalent. So the demand wasn't going in anywhere. The only problem we saw was the higher tonnage of trucks that actually faced a little bit of a slowdown. LCVs, on the other hand, the last mile connectivity part, was doing definitely well. So that's another area where in the May numbers, if you look at Ashok Leyland's and even for Tata Motors for that fact, they've done pretty well. So demand continues to be pretty strong on the domestic front at the moment across the board, across the industry. The only fears that we have at the moment post the news of the deal finalization would be El Nino, where the rural demand would kind of then come down, or the deferment of demand would kick in. So that's what we're looking at the moment. So the pecking order, like you rightly mentioned, would be the auto anchs. That's the new age ancillaries that we would look at. Then the PVs and two-wheelers, and then the commercial vehicles.
Right, so that's the pecking order, but it must be said that the entire cohort of stocks is doing particularly well in trade today. Dhruv, thanks so much for taking the time. Pleasure speaking with you.
Thank you, Alex.
All right, we've got a packed show today. We've got Aman Chauhan, who's fund manager at Abacus Asset Manager, joining us as well right now. And Aman, pleasure having you on the program. Thanks so much for taking the time. There's clearly celebration on the street today, and for a second day in a row, the question is, how durable do you think it is? Because you've seen crude oil coming off, and that really has been, a lot of people agree, the fulcrum that moves the Indian equity markets. But would you be confident that this will hold out?
Frankly, that nobody knows. The only thing is that people are waiting. If crude comes off, then the currency will also come off. So already we have seen that we are below 95. So if crude comes further down, currency can come to 90, 92 levels. A combination of these two factors could be trigger enough for FIs to come back to India. Right now, the foreign interest in India is pretty limited because they are making much better returns in US or say in Korea or Taiwan or other markets. where India as such has lost out in the AI trade because we don't have any direct companies which can benefit out of it. So getting the FI interest back would be very important. Otherwise, what will happen is we'll sustain based on domestic flows, which I believe is not going to be enough to see a meaningful rally. So we can have a pop like today when the markets are up 2%, or we can have another, say, 4-5% move in the market. But anything beyond that, we would need some foreign capital to come in. So that's something which is very critical.
Aman, what is the probability of that taking place? Because even in the absence of a geopolitical crisis in West Asia and the resolution of supply chain issues, which hopefully will happen sooner rather than later, so earnings can recover, nothing really has changed on the ground. There's still a lack of an AI play, and the other issues that have been a problem with regard to valuations, that continues.
I think the valuation issue has now got resolved. If you look at the numbers, the 5-year returns for heavyweights like HDFC Bank, Infosys, TCS, even ITC for that matter, even Reliance is zero. And in dollar terms, it is negative, right? So that's where bulk of the foreign money was, and that stocks have not performed. And all these companies have given you earnings growth on all the 5 years that we are discussing, right? So the valuation, what used to be a few years back and what it is today is much, much better. And hence, I think valuation is not an issue. What we now need is a trigger. Once we see some momentum building up in India, once we see demand picking up, which is very likely once oil comes off, then I think the FIs also will come back. So I would place a very high probability that FIs can come back. Yes, but they just need a trigger for them to notice India. Right now, it's been ignored because they are busy partying in other markets. Once they see India also performing, then I think there are enough of bulls for India out there. They'll all come back.
Aman, good afternoon, Neeraj here. You guys are certainly busy shopping out there. I see the name across market caps. See the name of Abacus across the various schemes that you guys may have. What is it that, let's say all the shopping that you've done, you did it without the knowledge of this peace deal happening today, right? So what is it that you've been the highest conviction, or what that you've had the highest conviction personally in the last couple of months on various factors, and where does that conviction stand now? Which theme, which sector, which stock?
So frankly, past 2 months has been uncertain, and in that uncertain times, we have also been positive but pretty cautious, not very aggressive buyers per se. We have bought more of pharma, we have bought more of renewables, we have bought some of capital goods, and financial, we have been neutral. Going ahead, once the event which has happened yesterday fructifies, then I think we can add more of private banks and maybe some NBFCs in the portfolio. Otherwise, broadly, the other strands of pharma, renewables, domestic manufacturing, that will continue to be bulk of the sectors where the incremental money goes.
Aman, quick last question. In the universe that you're tracking, what is your anticipation of the impact, assuming that we end the war right now, right? Assuming that crude oil stays where it is, what is your assessment on FY27 earnings?
Oh, it's very difficult to say because all the portfolio companies as well as the other companies that we have spoken to, nobody has a very clear view. Everybody was like, let the first quarter results come in and let's then get clarity as to how the trend is going to be. Till 2 days back, 8 out of 10 companies were negatively impacted. Now, if crude comes down and it goes below 80, then I believe the damage will be pretty much manageable. Then effectively you have some margin pressure, which I believe will be able, most of the companies will be able to pass it on. If crude stays above 80, 85, then I believe 5 out of 10 companies would still be negatively impacted because you will not be able to still pass on all the earnings growth. So while demand will remain strong, my guess would be if crude is around 80s, we will heading towards like 12-13% of earnings growth. But what is more important is that the highest weight in Nifty is banking and IT, right? And that's where the maximum FI selling has been, right? So if that FI selling continues or if they don't come in to buy, these two sectors won't perform. But the broader market will definitely perform because that's where the bulk of the domestic money is flowing in. So it will be very difficult to say as whether earnings growth is going to impact which sector. Even if broad earnings is 12-13%, certain sectors will definitely do well at the expense of, say, IT or say banking or some of the other sectors.
good point. That's a good point. Aman, always a pleasure speaking with you. I love the clarity of thought. Thanks so much for taking the time.
Thank you.
Okay, Hemen, just a couple of pockets that I want to ask you about. They're underperforming in trade today, but healthcare and pharma, from that, does anything stand out to you that you can buy right now on the technical charts?
Not exactly from a shorter term point of view, Alex, but if you take a slightly longer term point of view, yes, I think Sun Pharma looks very interesting. It's in a rounding bottom for the last 2 years. I believe the stock will head towards 2100 sometime sooner than later. So Sun Pharma stands out. And the other stock which looks interesting is Divi's Lab. We've been here for a year consolidating. The breakout level is 6905. It could consolidate a bit more, but looking at the move before this consolidation, it seems to be a breather in an up move. So both Sun Pharma and Divi's Lab look very interesting, Alex, but it's not a very short-term sort of a call, no.
Okay, on that note, gentlemen, Hemen, Mayuresh, absolute pleasure having you. And thanks so much for taking the time. Mayuresh, we'll speak to you more very, very quickly. Thank you so much once again for taking the time. We have to slip into a very quick break. We'll get you the top trading strategies heading into trade tomorrow and wrap up trade for you today, the last half an hour after this very short break.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype.
All right, back with India Market Open right here on NDTV Profit. A lot of stocks have fallen off from the highs of the day, including in the banking space, but we still a healthy 240 odd points up for the Nifty. So that should please the street, if you will, that even if banks and the heavyweights and some of the paint companies, etc., like Asian Paints are all coming off, the others are stepping forth, and which is doing well. But in a market like this, what do you really want to know? What is it that dealing rooms are talking about, right? What is the chatter? Where is it that the buzz is? And well, somebody who's back with his dealing room chatter is Somit Sarkar from a holiday and straight to the dealing rooms and telling us straight on the screen as to what is it that he's heard on the street today. Somit, good afternoon.
Good afternoon, sir. Firstly, if the first stock that the dealers have highlighted is Pidilite Industries. Now, dealers indicate that there are buy flows on the FII desk, and they are saying that the company has taken price hike across categories, and this coupled with lower VAM prices, which is one of the key raw materials for the company, should benefit the company going forward, and hence there's buy flows coming in. For Tata Consumer, there are buy flows on institutional desk, both for FI and DIs have been accumulating this counter. Dealers are indicating that Tata Consumers has had a better Q1 compared to other FMCG companies and should report a good set of numbers in the first quarter of FY27. For Coal India, there are buy flows on the large HNI desk. Dealers expect MSCI related flows very soon owing to increased free float in this counter. When it comes to Jyoti CNC, there are buy flows on the large HNI desk, and dealers are expecting some new order finalization announcement that could come in from the company's side anytime soon. And lastly, when it comes to Tenneco Clean, there are sell flows on the large HNI desk. Dealers are expecting a block deal very soon in this counter. A large FII who's currently holding shares might look to exit Tenneco Clean this week is what dealers have indicated.
Okay. All right. Somit, thanks so much for that. And quite a few stocks that you've highlighted. We'll take a check on some of these with our guests who are joining in. Osho Krishan, Chief Manager, Technical and Derivative Research at Angel One, as well as Siddharth Khemka, Head of Research, Wealth Management at Motilal Oswal Financial Services. Gentlemen, thanks so much for taking the time and good afternoon to you. Osho, let me come to you on a few of these names that Somit has highlighted. Pidilite, for obvious reasons, is in focus on account of crude oil prices, buy flows on FII desk, a couple of others as well, Tata Consumer and Coal India, as well as Jyoti CNC. All of these are finding buying interest. Does anything stand out to you on the charts?
Very good afternoon, Alex. Firstly, thank you for having me at the show. Well, yes, no doubt, Pidilite Industries has been an outperformer. There has been very strong momentum in this counter. The time it has given a breakout around the zone of 1480, from there onwards, 100 point of rally has already been seen. But looking at the technical structure, it has given a very strong breakout, a strong consolidation. Multi-week breakout is there, which is pending to be closed around the zone of 1550. So if this week, if it closes above the zone of 1550, then we can see a drastic trend reversal in the counter, and the momentum can be seen moving the counter further towards the zone of 1640 to 1660 in the coming weeks. So overall, I'm expecting a strong traction in Pidilite industry, whereas Tata Consumer, on the other hand, is having a very strong sell-off kind of a scenario. Technically, the counter has not performed well from the past 4 weeks. It has been into a negative terrain, currently also hovering below the short-term and even the long-term moving average. So once it surges above the zone of 1140, then only there will be some kind of buying that can be seen in the counter, or else one should wait for further correction towards 1060 to 1070. That will be an apt zone to start accumulating them.
Okay. Well, okay. So selective stocks, not necessarily everything across the sun. And I'm guessing that is something that maybe fundamentally too our guests would echo. Siddharth Khemka, on air with us. Siddharth, great having you. Thanks for taking the time out. What was the mood in the dealing rooms today, Siddharth? Are people generally happy with the developments over the last 12 hours? And are people making bets and positions as well, which are slightly outsized compared to the last few days, or not quite?
Yeah, good afternoon, Neeraj. I think the dealing rooms are a bit cautious. Yes, there was some euphoria because of the relief that we saw on Friday as well as today. But I think there is some money which is being taken off the table after the 2 days of sharp rally, and people are still waiting for this deal to be actually signed and then maybe go on an aggressive buying spree. But yes, selectively, there is some buying interest that is happening across the crude sensitives. For example, you have strong buying interest in some of the auto names, including some of the auto financing companies like Sriram Finance, Interglobe Aviation. Some buying interest we saw in the oil marketing companies. FMCG, again, not across the board, but very selectively, given that the monsoon is likely to be a bit weak, rural demand is likely not likely to be very strong. Hence, I think some selective buying in consumer durables, but largely, I think there is a bit of profit booking that we are witnessing on the dealing rooms.
Got it. Okay. Siddhant, there's also a note that Motilal Oswal put out with regard to travel companies, and seemingly you guys are bullish on travel stocks. So on TBO Tech, for example, you're expecting margin expansion of over 16% by FY28 versus the current 14%. The EPS compounded annual growth rate of as much as 43% over the course of 26 to 28. This is something that you're looking at. So you've got a reiteration of the buy with a target of 1765, implies an upside. I do not know if it is with today's price because it's up as much as 8% in trade today. We'll have to take a look at that. But on Ixigo as well, initiating coverage with a target of 217, and that's a considerable upside as well. The stock is up 2.5%. Flight, train, bus segments to deliver a compounded annual growth rate of 22, 17 and 34%. It's pretty dramatic, and margin is set to hit 10% versus 6%. So here too, there's expectation of a margin improvement. And finally on Yatra, again, there's an initiation of coverage with positive stance underpinned by EPS compounded annual growth rate of 41% over the course of 26 to 28. So you want to take us through why there is such positivity on travel stocks?
So yeah, I think, Alex, thanks for highlighting that report. I think you read in detail. But what we believe is, the Indian travel agency market that has evolved from being a fragmented, agent-led offline model to now a digital-driven ecosystem, which is largely anchored by the online travel agencies, better known as OTAs. And that has kind of transformed the discovery, aggregation, as well as price transparency. Post-COVID, we saw the sharp resurgence in the domestic travel, both within India as well as outbound travel from India has taken a sharp jump. And now we believe that with the advent of AI, the OTAs are now evolving into an intelligent platforms. So what we believe is that the OTA market is one of the fastest growing markets in the travel segment globally, and is likely to expand from about 2,000 billion rupees, which was in. So currently, we believe that the market size is roughly somewhere about 4,000 billion rupees and growing at 13% CAGR. What we like is that some of these players, as you rightly highlighted, we have seen margin expansion, profitable growth, and potentially strong revenue growth given the platformization achieves scale. Plus cross-selling of high margin segments such as hotels, holiday packages, MIC, and some of the ancillary bookings that these OTAs are able to do. And within that, we have some of these players which are kind of doing very well, as you rightly highlighted. TBO Tech witnessing a strong margin expansion plus an EPS CAGR of 40% plus over the next 2-3 years. Ixigo, again, similarly, we are expecting the various sub-segments, so by train, bus, apart from flight, which is again witnessing a lot of growth. The bus segment is expected to grow at about 34% CAGR, and margins also to reach double digit for Ixigo from currently 6% levels. Again, sharp, that should lead to sharp EPS outperformance. We are expecting 50% EPS CAGR in Ixigo as well. Finally, Yatra, I think that is also witnessing a strong growth.
Yeah.
Our 40% earnings growth. and should lead to higher margins plus profitability mix. So this is a segment where in this environment, largely domestic focused and should do well.
Okay, largely domestic focus should do well. A slew of ideas. Also, Yatra as well being recommended. The stock is up 4% today. You know what else is up 4% today? That's Larsen & Toubro. And you don't normally see this one do it. But it's turned positive. Okay, 3% now, but it was up 4% for the better part of the day today. It has turned positive for 2026 with sharp moves in the last 2 consecutive sessions. My colleague Parth is standing by with an interesting bull versus bear case on Larsen & Toubro. And today it's very difficult part to make a bear case, I presume, but still lay it out for us.
Right. So first of all, it's good to see L&T in positive right now, because when the Middle East tensions were at their peak, the stock saw a very steep down move. So let's understand the bull versus bear case scenario to understand both the sides of the coin. Starting with the bull case, L&T is known for its huge order book. They have an order book of 7.4 lakh crores, which grew at a rate of 28% year on year. That provides them really strong revenue visibility over the upcoming years. But there's a bear case as well, because these large order books come with their own execution risks. If the execution doesn't pick up in the upcoming years, then the order inflows fail to convert into revenues for the company. And this has been seen in the management commentary as well, where they have said that they are expecting a weaker first half in the FY27. So this is the bear case that investors need to watch out for as well. Now, the second thing is that the private sector share in the order book has risen from just 21% to 39%. Now, this rise in private sector share actually does 2 things for the company. It not only improves the margins for them, but it also improves their working capital because it reduces the receivables for the company. Now, that is in the domestic order book. But there's a bear side as well, because now they are increasingly dependent on the private capex cycle. If that witnesses a slowdown in the upcoming years, it might impact the company's earnings as well. Now, moving on to the next one, the management has laid out a Lux 2031. That's a big commitment that they have made, that they're targeting a revenue CAGR of 12 to 15% through FY31. Now, that sounds good, but in the last 3 years, from FY23 to FY26, their sales have actually grown at a CAGR of 16%. So the management is actually guiding for a slower growth in the upcoming years. Now, that is something that investors need to look out for. And the last one is that their new business verticals that L&T is slowly venturing into, they are attracting an investment of 33,000 crores. That's a huge number. If these new businesses are successful, it will bring on additional revenues and profits for the company. But these investments are capital intensive in nature, and they might limit the return of equity of L&T to the 16 to 17% range. So this is the whole bull versus bear case scenario. If we have a look at the analyst recommendations as well, then over 26 analysts have a buy rating on the company, while 6 have a hold rating on the company, and there's only 1 analyst with a sell rating. They are implying an average return potential of 7.7% on the stock. Lastly, on the valuation side as well, the current PE of L&T stands at 36.6 times, which is broadly in line with their 5-year average of 37.7 times. But it is available at a pretty good level of 27 times if we have a look at the 1-year forward basis.
Okay, interesting. Thanks a lot for that. That's a comprehensive one. Osho, I wonder if after 2 days of a trade up move, and even L&T is slightly off from the highs of the day, is there a trade still remaining in Larsen & Toubro? Fundamentally, we've understood a bit. I'm sure Siddharth would say good things about it too, per se. Maybe the valuation is not so much, maybe it is. But from a trade perspective, what do you think?
See, overall, L&T no doubt has given a very strong momentum in last 2 trading sessions. But before that, it was on the verge of giving a breakdown below the 200-day simple moving average. So as of now, it is present around the bearish gap. So until it recovers from the zone of nearly 42.50 on a closing basis, till that time, one should not be very much aggressive in the counter and try to utilize any kind of dips to be seen as buying opportunity. For now, I am expecting 4100 to 4070 as a zone of accumulation, and 4250 is the zone where one should lighten up their position. Once it breaches the zone of 4250 on a decisive manner, then only there can be a decent pay for another set of rally in the count.
All right. While we're on the subject, Siddharth, the consensus targets seem to imply a potential upside of just about 7-8%. Do you buy into that, or are you more optimistic on Larsen and Toubro?
No, yeah, Alex, I think the discussion made was pretty clear. While there are long-term drivers in the sense there is a strong order book, plus for FY27 as well, the prospect pipeline remains strong at almost 18 trillion rupees compared to 19 trillion, which we saw last year. However, what needs to be factored in is that there is a softer guidance that the company has given, and FY27 we could see a growth of about 10 to 12%. So our target price is about 4,500, and we believe that 8 to 10% upside, given the valuations and the softer pickup that can happen in the next 1 or 2 quarters, that could lead to around 8 to 10% upside in Larsen.
Got it. Okay, let's talk about Interglobe Aviation, because there are quite a few things that are working in favor of the company right now. It might have come off just a tad bit, but it's still trading with gains of about 3.5% or so. What are the factors that are playing in? You have higher air traffic, which is certainly a positive. You have weakening competition, and you've heard of some of the issues there for the other players in the space. It continues to dominate with the share that it has in the domestic pie at the very least. And the latest tailwind has come through in the form of lower crude oil prices. So quite a few things that are working in favor. The daily average domestic air traffic in June 2026 so far stands at 4.69 or over 4.69 lakh, compared with 4.62 lakh, and that's the year ago period. The weakening competition, Air India's flight count is 25% lower compared with last year in June. And the cut may be on account of an attempt to reduce losses. Remember, a lot of these airlines had curtailed flights in order to curb the losses on account of higher crude oil prices. And the third benefit, this is something that accrues to everybody though, Brent at $83 to the barrel as things stand right now, and it's the lowest since March 10th. The ATF price in international market is also down as much as 27% compared with the peak in April 2026, and the ATF prices in domestic market, however, remain unchanged. So there's only a positive that could accrue going forward. Siddharth, what's the view on Interglobe Aviation? Would you buy at these levels, or would you say that quite a bit is already in the price?
No, Alex, I think we are a bit positive on Interglobe. While a lot of disruptions has happened, and we believe that a bulk of it, the company is past a lot of issues. We are seeing a benefit of the recent decline in oil prices, which is a major cost component for airline. That should be positive. Even the dollar rupee, that has kind of now stabilized after seeing the sharp weakness in the last couple of weeks. So our long-term thesis is that a company remains the market leader in the domestic industry with 60% market share. They are well positioned to benefit from the growth which is coming in from increased domestic travel, tier 2, tier 3 towns where the connectivity is now improving. The airline on its part has a very aggressive growth plans. They plan to increase their fleet from about 440 to 550 over the next few years. Plus, there is a very aggressive international expansion plan. They plan to have almost 40% of capacity on the international routes, expand the long-haul aircrafts to about 10-15% from currently 4%, where the margins, profitability are much higher. So on back of all these things, we are expecting an EBITDA CAGR for 46% over the next 2-3 years, and hence we believe that from a long-term perspective, one can definitely look at Interglobe. We have a buy rating and a target price of 5,600.
Okay, so considerable upside from this point as well, despite the fact that over the last 1 month, we've seen gains of about 13%. And that's, of course, helped quite a bit by what you're seeing in trade today. Osho, very quickly on the charts, Interglobe Aviation at 4875. Is it a buy at this level?
At these levels, the counter has given a sloping trendline breakout or even a symmetrical pattern breakout on the daily time frame chart. So overall, the structure is positive, although on the higher end, the first potential resistance is placed around the zone of 5,050. So that should be the immediate hurdle that can be seen in the counter, followed by the gap, which is approximately around the zone of 5170, 5200 odd levels. So from here onwards, I'm expecting a decent run in the short-term period, but 5200 will be a crucial hurdle. If it breaches the zone, then only we can see positive traction coming back in the counter.
Okay, all right. So that's a word on Interglobe Aviation. Let's go across to Jasmeet to find out what other stocks are buzzing in trade today. Jasmeet, what's on your list?
Well, Alex, thank you for that. Starting up with the first one, it's Orient Pro Solutions. Well, this stock has been buzzing in today's trade and it's up about 16 odd times on 20-day average in terms of the overall volume. And the stock is buzzing on the back of those volume flows. If you look at the overall up move, the stock has gained biggest gain since Feb 1st. We are seeing in the terms of up move. Well, the second stock is Aarti Industries. Even this stock is buzzing on the back of the heavy volumes and currently trading roughly 15 times the 20-day average. While the last one, in terms of the volume buzzing, we have something like Kalyan Jewellers. The stock has hit 52-week high today, while it's also buzzing in trade and has gotten the biggest gain since Feb 9. So we have seen that the overall geopolitical tension easing and the stock performance is something that has been taking the overall market up move, and these are a few stocks buzzing on the back of those flows. Well, we also a couple of stocks buzzing on the back of the news flows. Well, the first one is Oswal Pumps. Well, company received 3 LOAs from South and North Bihar Power Distribution, and the stock has been buzzing in trade over last couple of days. It's up nearly 14%. While the last one is Aditya Birla Capital. Well, the company plans to do a fundraise of roughly 4,000 odd crore rupees, and the company is also seeing a marquee investment from the marquee investors. Well, the International Investment Fund to roughly invest 920 odd crore, and the stock is up nearly 10 odd % in last two trading sessions. So these are a few of the stocks buzzing on the back of volume and news flows.
Okay. Osho, not too much time left. It's 3:22, but I will still ask, any stocks that you say you can buy today and sell tomorrow?
Yes, there are two counters which is into my radar. The first one is Trent. Trent has given a very strong volume-based breakout, approximately 5.2% higher at current level. So 2,900 will be a decent zone to buy the counter. 2,800 should be the advisable stop loss, and 3,050 will be the target for tomorrow. So this will be the first BTST counter. The other one is Dixon. Dixon, after many days, have given a very strong momentum-based buying, and looking at the recent development, I'm expecting that this might see further movement in the coming period. So Dixon can be seen as a BTST candidate. 11,650, which is today's low, should be considered as a stop loss, strict stop loss, and on the higher end, 12,400 will be the target that one can expect in this count.
Siddharth, I want to come to you on this consumption theme, because in the fourth quarter, you were seeing signs of strong demand, volume was picking up, various other things were playing in favor of these companies, right? But in the first quarter, what has played out ultimately is the worry on packaging costs and crude oil, etc. And quite a few of these companies have passed it on in the way of price increases. Even today, we were talking about toothpaste and how Dabur and HUL have followed on the back of Colgate Palmolive, and the fact that they've raised prices by 4 odd % or thereabouts. So do you think that these will now see a fillip in the second quarter onwards?
So I think, Alex, if you look at, there are mixed cues that are coming in from the FMCG space. While on one side, the higher raw material costs are putting pressure, demand environment definitely was much better last quarter. But going forward, the first half of FY27, I think the expectation is not of a very strong continuation of that growth, given that the GST-led price cut, there was some steep up demand that now got almost consumed. And with the price hikes being taken, I think there could be incremental pressure on some of these consumer names. So clearly, I think within the FMCG space, there are certain sub-segments where we believe the earnings growth have come pretty strong. For example, there is a Marico where Q4 was strong, and we are expecting that strong growth to continue in Q1, Q2 as well. Apart from that, I think some of the other names within the consumer space, Pidilite, which looks interesting. They have been reporting quite the last 2-3 quarters consistently strong performance, and we are expecting a steady growth there. A lot of interest, plus the beneficiary of the fall in crude oil prices as well.
Speaking of falling crude oil prices, there's a whole cohort of stocks that is buzzing in trade today because of comments, Siddharth, with regard to ethanol and 100% ethanol utilization, and among them, there's Sri Renuka Sugars. The only worry is the stock is up, 8%, and a few of these sugar names are also doing particularly well. The only worry, though, Siddharth, is that if crude oil prices come off even further and we head towards 70 or even lower, then does this become a conversation that gets forgotten? And so therefore, would you book out right now? Some of these players are seeing 40%, 45% utilization even as things stand right now.
So yeah, Alex, I think that discussion could keep continuing to happen because we started with some 3-4% of blending. Now we have reached almost 20% blending of ethanol, and now we are at 85% or 100% is being approved. So that's a long way to go before the engines can take in 85 or 100% of ethanol. But I think that's a space which actually looks good. I think some of the fundamentally, or you can say stronger balance sheet companies, for example, Balrampur Chini, which is much better in terms of financials, could continue to see that up move over the next few quarters.
Okay. Fair call. And Siddharth, that's a valid point as well. Osho, I know you would have already given one, but since I haven't asked you, I'm asking you, what is your top closing call or positional call for this week? Very quickly in 30 seconds, Osho.
From positional point of perspective, Nasdaq is looking quite good. There has been a reversal in the counter. The counter has surged above the 20-day exponential moving average after the elongated period of correction. So from a positional point of view, one can look for accumulation in Nasdaq. Near about 2380 will be the advisable technical stop loss for the counter. And on the higher end, 2580 will be the target that one can expect for the week.
Leave it at that, gentlemen. Thanks so much, both of you, for taking the time out and being with us. Really appreciate your time. Couple of minutes left for the markets to shut shop, and despite the fact that we are off the highs of the day, Alex, this day would go down as a good day.
Yeah, certainly it will. Even though we've come off, as you've said, from the high point of the day, we're holding on with gains of close to 1% for the benchmark Nifty 50, 23,850. At some point you were thinking, will we close above 24,000? That's not happening today, certainly. But at least the market breadth remains okay, even though the gap is closed over the course of the day. In fact, let's pull up the advanced decline ratio. You'll see exactly what I'm talking about. And that gap will have narrowed just a tad bit. In fact, it's not even visible on the screen. And that's because the broader markets are looking sanguine. Pull up the broader markets, the mid-cap index as well as the small-cap index, continuing to trade with gains, even though we're off the high point of the day. Take a look at that, 1.4% for the mid-cap index, about 1.3%. Okay, we were at 1.6% at the start of this 1 hour show, and we're at 1.2% right now. The Nifty Bank has given up ground, so that's one index to track as well. Very closely, pull that up, and we're trading with cuts, not cuts, but gains of only about 0.5% or so, and ICICI Bank trading in the red. So pull up the heat map for the Nifty 50, and I will draw your attention to the bottom of the screen. By the way, where the green has reduced just a tad bit, you have about 15 stocks in the red right now, and NTPC, Bajaj Auto dropping substantially from the high point of the day. ICICI Bank now with cuts of about 1% or thereabouts, falling about 2% from the high point or more than that, is really the reason why you're seeing this drop. Axis Bank and HDFC Bank also dropping quite considerably from the high point of the day. What is working though is Trent with gains of 5.2%, HDFC Life, Shriram Finance, high beta stock doing well, Eicher Motors and the entire commercial vehicle play. So all told, just to wrap things up for you, we've held on with gains for the benchmark Nifty 50, about 1% or thereabouts. Quite a few big movers on the back of the fall in crude oil prices and the hope that we are nearing a resolution to the West Asia crisis that seems to have hurt us more than anybody else. But we'll carry this conversation through the evening and see you again tomorrow morning to see if this continues for the rest of the trading week. From Neeraj, myself and the team that put the show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence, and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now
Hello and welcome viewers, you're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have really fared today. So viewers, it was a good day of trade on the Lal Street as benchmarks have cheered the Iran-US peace deal. Nifty has topped 24,000 levels but settled around 23,900 mark. And Sensex has ended with 1% gain. Broader markets, however, they have mirrored the gains of the key indices with value buying seen in both mid and small cap counters. And in terms of sectoral trades, broad-based rally was visible across the key sectors. Realty and auto counters have led the gains on the Lal Street, while pharma was the only sector which was under pressure today, losing over 0.5% in trade. And starting the show with the biggest story of the day, after months of conflict, a major diplomatic breakthrough may be changing the course of the Middle East now. The United States and Iran have finally announced an immediate and permanent end to military operations. And the deal includes plans to reopen the Strait of Hormuz and also lift the US naval blockade on Iranian ports. While further talks are expected in Switzerland, oil prices have reacted with a sharp fall on hopes of easing the supply concerns. And further talks are also planned in Switzerland. While nuclear negotiations could really follow, Israel is yet to formally respond, even as airstrikes have hit Beirut earlier. And Trump has also taken aim at Israeli Prime Minister Benjamin Netanyahu, calling him a very difficult guy. And viewers, oil prices have fallen sharply after the United States and Iran reached an interim agreement to end months of conflict, raising hopes that the Strait of Hormuz will soon reopen. And the prospect of smoother crude flows have eased the concerns over the global supply disruptions that had driven prices higher earlier this year. And markets were also supported by signs of crude transit resuming through the region, emergency reserve releases by major economies, and also softer demand from China. So together, these factors have really helped improve the supply outlook and also pushed the oil prices lower. US travel-related stocks have surged after the United States and Iran have reached an agreement to end the hostilities and also move towards the reopening of the Strait of Hormuz. The development has triggered a sharp decline in the oil prices, boosting the sentiment across the aviation and also travel sectors. And lower fuel costs are also seen benefiting the airlines, while also easing concerns over the global energy supplies and also trade disruptions that have improved the outlook for the broader travel ecosystem. And travel-related stocks were also buzzing in trade as easing geopolitical tensions have boosted the sentiment across the sector. Adding to the momentum, Motilal Oswal has turned constructive on the online travel space. And the brokerage has reiterated its buy rating on TBO Tech, with the target price 1,765 rupees, while also initiating coverage on Ixigo with the target of 217 and also Yatra with a target of 125. So the positive brokerage commentary there, coupled with expectations of stronger travel demand, also lifted the investor interest across the segment. Meanwhile, jewelry stocks have seen strong buying interest after a US-Iran peace agreement has sparked a rally in global bullion prices. Sentiment has improved as the proposed deal has raised the expectation of reduced geopolitical uncertainty and also reopening of the Strait of Hormuz. Now, the surge in gold prices have boosted the optimism around jewelry counters, and also with investors betting that firmer bullion trends could really support the sector sentiment in the near term. Meanwhile, Deccan Gold Mines was in focus after the Supreme Court has upheld the validity of mining lease rights granted before the 2015 amendments to India's mining laws. Now, the court has ruled that decisions taken to grant the mining leases prior to 2015 remain valid, and that the auction-based regime introduced later does not automatically override those rights. And the verdict is significant for companies that had secured approvals before the rule change but were yet to complete the lease process. So following the ruling, Deccan Gold has said that it is reviewing the implications for its Ganachur gold project. And we are shipping stocks has witnessed strong buying today after the US and Iran have announced a peace agreement. They've also boosted hopes of smoother global trade flows, and investor sentiment has improved on the expectation that the Strait of Hormuz could reopen fully, easing concerns over the disruptions to a critical global energy and also shipping route. Now, the development is seen as a positive for maritime trade, freight movement, and also shipping operations, and shares across the shipping and offshore services space has gained as markets have cheered the prospect of reduced geopolitical risk and also a more stable operating environment. Meanwhile, Foxconn is strengthening its artificial intelligence infrastructure ambitions through a new partnership with Schneider Electric, and the two companies will collaborate to develop integrated AI data center solutions, including AI server racks, power management systems, and also advanced cooling technologies. Production of the integrated AI infrastructure is set to begin later this year, with a focus on enabling faster deployment and also reducing operating costs for the customers. And the move comes as Foxconn accelerates its AI strategy following recent partnerships with the Intel and also SK Group, underscoring AI infrastructure as a key growth driver for the company. US shares of Bharat Forge has gained after its defense arm, Kalyani Strategic Systems, has showcased its MAG artillery gun series at Eurosatory 2026, one of the world's largest defense exhibitions. And the company has unveiled a range of truck-mounted 155mm artillery systems aimed at delivering highly mobile, rapidly deployable, and also cost-effective firepower solutions. And the showcase highlights Bharat Forge's growing defense manufacturing capabilities and also its push to expand the opportunities in global defense markets. US Oswal Pumps has remained in focus after receiving 3 letters of award from North Bihar Power Distribution Company and also South Bihar Power Distribution Company. Now, the stock has been buzzing on the street, gaining nearly 14% over the last 4 trading sessions. Now, the fresh order wins are seen strengthening the company's order book and also reinforcing its presence in the power distribution and also water infrastructure segments. Next counter to look at is Aditya Birla Capital, that has remained in focus after its board has approved an equity capital raising program worth 4,000 crores through preferential share allotments, and the fundraising is aimed at strengthening the company's capital adequacy and also supporting future growth plans. So parent company Grasim Industries will contribute up to 2,880 crores, while International Finance Corporation, or the IFC, will invest 920 crores. So Surjaya Investments will also participate in the capital raise, and the announcement has boosted investor sentiment, with the stock gaining strongly over the last 2 trading sessions. Viewers, NRB Bearings was in focus after Managing Director Harshbina Zaveri has released 19.6 million shares from pledge, significantly reducing the promoter encumbrances. And following the move, the proportion of the promoter shares under pledge has declined sharply from 31.64% to 11.42%. So this reduction in the pledge shares is generally viewed positively by the investors, as it strengthens the promoter holding quality and also alleviates concerns around leverage-linked risk. Viewers, Bharti Airtel has secured overwhelming shareholder approval to increase its stake in Airtel Africa through a 28,220 crore share swap transaction. Now, the deal will raise Airtel's holding in its African subsidiary to around 79% from nearly 63%, further strengthening its exposure to a key growth market. And structured as a cashless transaction, the stake acquisition will not require any additional debt or cash outflow. And the company says that the move will enhance its economic interest in Airtel Africa while also simplifying the group's ownership structure. Viewers, next counter to look at is Vedanta, which has completed a major milestone in its restructuring journey with the stock market listing of its 4 demerged businesses. Now, the newly carved out entities, Vedanta Aluminium, Vedanta Power, Vedanta Oil and Gas, and Vedanta Iron and Steel, have begun trading on the NSE and BSE, and the listings mark the final phase of Vedanta's mega demerger plan, which is aimed at creating focused sector-specific businesses and also unlocking value for shareholders through independent operations and capital allocation. Now, Vedanta Aluminium led the gains for PAC only to give up some of these gains by the end of the day. And viewers, India's wholesale inflation has accelerated sharply in May, rising to 9.68% from 8.3% in April and coming in above the market expectations. Now, the increase was driven by elevated fuel costs and also firming food prices, reflecting the impact of disruptions in global energy markets following the US-Iran conflict. And the latest readings highlight persistent input cost pressures across the economy. It also underscores the challenges posed by volatile commodity prices. Meanwhile, India's merchandise trade deficit has narrowed marginally in May, as stronger petroleum exports have helped offset the impact of a higher import bill. Now, exports have increased sequentially during the month, and this has been supported by elevated global energy prices, while also imports have remained robust amid rising crude and energy purchases. And the data reflects the continued influence of global commodity markets on India's trade balance, given the country's heavy dependence on imported crude oil and also cooking gas supplies. And viewers, Daimler Truck is expanding its presence in the defense sector with a new branding and investment push. Now, the German truck maker will consolidate its global military-related activities under Daimler Truck Defense banner, bringing together capabilities from across its brands, including Mercedes-Benz trucks, and the company plans to invest hundreds of millions of euros in development, production, and also sales and services operations. And Daimler Truck is also targeting defense-related revenue of 1 billion euros by 2028 and also expects to expand its workforce as it scales up operations in the segment. And a standoff is brewing between liquor companies and the Telangana government. Now, alcohol makers are urging the state to clear pending dues of nearly 3,700 crore rupees before going ahead with the planned discount scheme, warning that delayed payments are putting pressure on the cash flows and also business operations. And viewers, India's food safety regulator is tightening the screws on misleading claims The FSSAI has issued notices to 14 popular food brands over labeling and advertising practices, seeking explanations on claims that could potentially mislead the consumers about the nature, quality, and even health benefits of their products. Let's look at some national news now, viewers. Noida International Airport at Jewar has commenced commercial flight operations, marking a significant milestone for India's aviation sector. And the launch gives the National Capital Region its third commercial airport after Delhi and Hindon. Now, Indigo became the first airline to operate from the Greenfield facility with inaugural services connecting Lucknow and Bengaluru. Now, the airport's opening follows months of operational testing and also comes after its inauguration earlier this year, strengthening the regional connectivity and also supporting the growing demand for air travel. And here's the Indore Municipal Corporation has carried out a demolition drive in the Sadar Bazaar area as part of its road widening initiative. Now, the exercise aims to ease traffic congestion, improve the connectivity, and also create additional road space in one of the city's busy commercial zones. Now, civic authorities have said that the drive is part of the ongoing efforts to upgrade urban infrastructure and also streamline the traffic movement. And a liquefied natural gas tanker chartered by Petronet LNG was among the first vessels to transit the Strait of Hormuz following the announcement of the US-Iran peace deal. Now, the development is being viewed as an early sign of confidence returning to one of the world's most critical shipping routes. While industry participants have welcomed the agreement, many operators remain cautious and are seeking greater clarity on security conditions before fully normalizing the operations through the strategic waterway. In fact, US President Donald Trump has warned that Washington may impose 100% tariffs on French wine unless France removes its digital tax on American technology companies. And Trump has said that he has conveyed the message directly to the French President Emmanuel Macron, urging Paris to scrap the levy on US tech giants. And the latest warning marks another escalation in the trade tensions between the United States and also Europe, with Trump having previously threatened steep tariffs on French and European alcoholic beverages during earlier disputes over the digital taxation. Whereas the UK government is preparing a major crackdown on children's use of social media. Now, Prime Minister Keir Starmer is set to back plans that could ban under-16s from some of the biggest social media platforms as concerns grow over the online safety, harmful content, and the impact on young people's mental health. In fact, the UK and Japan have agreed on a multi-billion-pound investment partnership aimed at boosting economic cooperation and supporting long-term growth. Under the agreement, Japanese companies are expected to invest billions of pounds across UK infrastructure, financial services, and also offshore the wind projects, potentially creating thousands of jobs. Now, the two nations also reaffirmed their commitment to the Global Combat Air Program, which is a next-generation fighter jet initiative being developed jointly with Italy. So the deal comes as the UK seeks to strengthen investment flows and support the economic expansion amid global uncertainties. Viewers, a court in Norway has found the stepson of the Crown Princess guilty on 2 counts of rape in a case that has drawn widespread public attention. And the ruling comes after a high-profile trial and also adds to growing scrutiny surrounding the Norwegian royal family. And Swiss voters have rejected a proposal backed by the far right to cap the country's population at 10 million by 2050. Supporters have argued that measure would ease the pressure on housing, infrastructure, and public services, but voters overwhelmingly have sided with the government and business groups who warn that it could hurt the economic growth. Now let's turn our focus to some sports news. Goals continue to light up the FIFA World Cup, with Germany and Sweden producing 2 of the tournament's most dominant displays so far. Germany has stormed to a commanding victory over Curacao, while Sweden has put 5 past Tunisia, sending a strong message to their rivals and also boosting their hopes of a deep run in the competition. And Germany's dream World Cup start gets even better. Felix has scored the fastest goal of the 2026 FIFA World Cup, setting the tone for Germany's emphatic win over Curacao. And the early strike highlights Germany's attacking intent as the four-time champions lay down a marker in the tournament. And Real Madrid are closing in on another major signing. The Spanish giants have agreed a deal worth up to £52 million and to bring Chelsea defender Marc Cucurella to Santiago Bernabeu after the World Cup. So the move underlines Madrid's plan to strengthen their back line as they build for the new season. With that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury.
The United States and Iran have reached a peace deal to end their nearly 4-month-long war. The deal will be signed on 19th of June in Geneva, after which the Strait of Hormuz will reopen. Amid reports of peace deal, US media reports that Netanyahu is seeking an urgent meeting with Trump after the G7 summit. But an Israeli minister promises to continue campaign to topple Iran's government. US-Iran peace deal cheers. Dalal Street Nifty ends in green, closes above 23,800, while broader markets move in tandem. All the key sectors end in the green except Nifty Pharma. Brent crude tumbles below $83 a barrel amid hopes of Hormuz reopening. Finance Minister Nirmala Sitharaman pitches for more foreign investment. FM says government is giving banks greater freedom to raise foreign currency funds. Wholesale inflation rises to 9.68% in May, up from 8.26% in April, driven by a sharp spike in fuel prices and broad-based increase in manufacturing costs. New WPI series launched with 2022-23 base year. India's trade deficit widened to $28.2 billion in May as compared to $22.6 billion last year, while the merchandise exports hit an all-time high of $45.2 billion, up 18% on a year-on-year basis. Commerce Secretary Rajesh Agarwal confirms that U.S. trade representatives will visit India on 22nd of June as both sides aim to lock trade deal. The visit is expected to help resolve remaining issues and give final shape to the India-U.S. trade deal. Major milestone in India's aviation expansion. Noida International Airport in Jewar begins commercial flight operations from today. The first flight from Lucknow landed this morning. Prime Minister Narendra Modi meets Prime Minister of Slovakia on his two-day official visit on the sidelines of the G7 summit. Both leaders hold bilateral meet focus on trade, investment, technology, cooperation and defense collaboration. In FIFA World Cup 2026, Sweden crushes Tunisia 5-1 to leave the North American nation's defensive reputation in tatters. Now all eyes will be on Spain versus Cape Verde match tonight. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar, and let's take you through all the top headlines that we are really tracking today. First, let's begin with the markets. I'll begin with what could be the most significant diplomatic breakthrough actually in the Middle East in years. And Washington as well as Tehran have really announced a preliminary agreement aimed at ending hostilities and also restoring stability in the region. Now, this, remember, marks a very good cue for the global markets also. Let's find out what really transpired. US President Donald Trump says that the deal will bring peace and reopen the Strait of Hormuz for the global shipping and ensure the immediate resumption of oil flows. Now, Pakistan's Prime Minister also says that the official signing ceremony for the peace deal will take place on Friday, June 19th in Switzerland. Meanwhile, Iran has also cautioned that the agreement does not mean that Tehran trusts its long-time adversary, but Israel's Prime Minister of National Security tweeted that Trump's agreement does not bind Israel. He warned every launch of a drone or missile towards Israel from Lebanon will lead to an Israeli strike in Dahia. Listen in to the former US President Barack Obama's take on this particular deal.
It is doubtful that any agreement that arises is going to be significantly different or a significant improvement from the deal that we had in the first place and had worked for a long stretch of time before the United States pulled out of it.
Now, in an early sign of easing tensions in the Gulf, an LNG tanker chartered by India's Petronet was amongst one of the first vessels to really transit the Strait of Hormuz after the announcement of the US-Iran peace deal. However, shipping companies remain cautious and are awaiting greater clarity on security conditions before fully resuming the normal operations through the critical energy corridor. So that's a good news coming in. Now let's take a look at India is really stepping up efforts to attract global capital, with Finance Minister Nirmala Sitharaman really reiterating the government's intent to bring in more foreign investments. She also highlighted greater flexibility for the banks to really raise foreign currency funds overseas. Let's hear out her take on this particular development.
We recognize we need more foreign capital to come in, but the fact that RBI has the fact that the RBI has now allowed public sector undertaking and banks to go out and pick money from outside, giving them a framework in which they can do it. And in that framework, a very important aspect is the hedging is at the RBI's expense. They don't have to hedge for the risks, particularly the currency-related risk, the volatility, the exchange rate risk. That will be on RBI. And as a result, the banks can now go unfettered to raise capital from outside. So we have taken a very calibrated approach to make sure that the markets do receive the required investments.
All right, attracting more foreign capitals there. Finance Minister Nirmala Sitharaman. Now let's focus on some of the important macro data which have been released today. India has rolled out a revised wholesale price index series with 2022-23 as the base year, replacing the old 2011 to 2012 series. Now, under this new methodology, wholesale inflation for the month of May came in at 9.68%, higher than the estimate of 9.55%. And up from 8.26% in the month of April. Now, food inflation, that accelerated to 4.49%, while the primary articles as well as fuel prices also saw an uptick. Now, the government has also introduced producer price index for goods and services with FY26 PPI inflation at 0.69% versus 1.71% in FY25. Now, the WPI and PPI series will run together for 5 years before WPI is phased out. So those are the numbers, but there are more macro data really getting released today. India's trade deficit widened to $28.2 billion in the month of May, coming in above the street estimates as strong domestic demand really pushed the imports up over 20% annually to $73.4 billion. Now, merchandise exports, they rose sharply to $45.2 billion, led by engineering goods, petroleum products, and electronics. Commerce Secretary said that trade with West Asia is showing signs of normalization. All right, another important set of data that is getting released today. At the moment, India's unemployment rate inched up to 5.5% in the month of May from 5.2% in April, according to the latest periodic labor force survey released by MOSPI. Now, the increase was driven by rural areas where unemployment rose to 5.1% from 4.6% a month ago. Urban unemployment, however, improved marginally to 6.4% from 6.6% earlier. And labor market indicators were mixed, with the labor force participation rate easing to 54.4% and the worker population ratio declining to 51.4%. Now, suggesting some moderation in employment conditions during the month. And to discuss further, I am being joined by Gaura Sengupta, the Chief Economist at IDFC First Bank. Gaura, always a pleasure to get your views on macro data. What do you make of the unemployment really inching up and more coming in from rural than urban?
So for rural, this is a relatively newer series. We also look at NREGA data, the Rural Employment Guarantee Scheme, where that database gets updated by the government on a daily basis. And that is still showing a decline in demand for jobs under NREGA, which is always a good sign, because that shows that they are getting employment in the other activities, and they don't have to, let's say, go for that guaranteed employment scheme from the government. And you're also seeing, if you look at the rural consumption indicators, two-wheeler sales, tractor sales, all that is on the higher side. So though this is a slight incremental pickup in the rural side of the unemployment rate, the other rural indicators, the demand as well as NREGA, is indicating that at least the growth momentum that was generated from last year's strong monsoon continues for now into FY27. We'll have to look at what this year's monsoon and its impact and how El Nino plays out, because that'll definitely impact rural demand the second half of the year.
Right, so this is definitely an important set of data to keep a track on, Gaura, and we are getting some indication there, a lot dependent on the monsoon and El Nino. But there are two other important data that have been released, and all put together, we'll have to sum it up on the health of the economy. So talking about the WPI as well as PPI in the new series, how do you read into those numbers on WPI, which is definitely higher than the estimates?
WPI, the pickup is definitely led by fuel on the new base. It's the fuel inflation is up by 30%. But there is also signs that there are non-food fuel items which have picked up. So, for example, if you see non-food manufacturing inflation WPI, that has also continued to pick up. I think it's more than 7% plus in the month of May. So we saw even in the month of April that the non-food, non-fuel items under manufacturing, for example, textiles, chemicals, base metals, they were beginning to pick up. So WPI is definitely showing the majority of the input pressure on producers is from the fuel metric, but we are also seeing it spreading into others such as chemicals, metals, etc. Because this whole West Asia crisis has not just affected fuel, but it has also globally increased the shipping costs. So it will add to imported inflation, and that is exactly what WPI is indicating. And
Gaura, it has had an impact across several sectors and not just crude and crude derivatives and not just transportation. And we have discussed this. But now that the war is ending and hopefully that peace deal will get signed on 19th, how long do you think that this situation will take to recover? How much of the damage is already done in the 1 quarter in which pretty much the full impact is seen?
So definitely you'll see some impact on growth indicators. It'll be more from a margin squeeze perspective because input costs, that's what WPI is telling you. WPI is telling you the input pressure on producers is there. The good news is that with this, if the Strait, as and when the Strait of Hormuz opens up, it reduces the risk of supply shortages. I think the major challenge earlier was that if the Strait of Hormuz had not opened up, you could actually see supply shortages coming into Q2, Q3. That risk eases off a bit. We expect crude oil prices will take some time because production facilities in GCC will take at least a couple of months to pick up steam. We also don't know the extent of damage. For example, if you look at the press releases from Qatar and other GCC countries, they were saying it'll take a few years to rectify the damage that has been done during the war. So, but we do expect that the good news is that this caps the price of crude. And for us, we had expected the Indian crude basket would average around $90 per barrel, which is building in a sharp decline in the second half of the year. So hopefully, I think the big positive is that the supply shortages risk now comes off.
That's right, Gaura. This is definitely a very, very positive sign for our economy, given our huge crude bill and import bill. But talking about import and export, what do you make of the trade data, which has seen the trade deficit really widen? And also the imports have been quite big, actually. It's a bulky amount, and we have really gone up on the import side as well. How do you read into the numbers, and what does it say about the future outlook? Gaura? All right, so we are talking about the three macro data that have really been announced today. When it comes to WPI, as Gaura Sengupta was really pointing out, that the input cost pressure on manufacturing is that, as well as the fuel cost. These are the two important components that have really started showing up. And quickly, Gaura, we have little time on trade deficit and the trade data for May. What is the picture that you're getting, and what does it speak about the economy and the future outlook?
I think the most positive bit that I can read from the trade data is the fact that exports has picked up. That's a good sign. We've got around 15% of our exports that go to GCC. So it's a good sign on year basis. The growth rate was quite positive. But on the import side, the pickup, I think, is mainly the crude oil basket. and hence we see a 20% increase. The overall trade deficit of around $28 billion is in line broadly with what we were expecting. We were expecting around $29 billion. We will be closely watching to see how much the volume of crude oil imports actually picked up in the month of May. It should be slightly better than the month of April, which is important from a availability or supply perspective. Because, for example, we've seen a 10% decline from PPAC data for the volume of crude that we were able to import in March and April. May we feel that the volumes would have picked up. Overall, we expect current account deficit of around 2.4% of GDP, assuming the Indian crude basket averages at around $90 per barrel.
And that's right, Gaura, all that you're penciling in and having an estimate of all really goes out of the window right now with this huge development, and hopefully after the peace deal, things will normalize and we'll get a better picture of recovery also of the economy. All right, thank you so much for joining in. Always a pleasure to get your expert take on the economic macro data coming in, Gaura Sengupta. All right, moving on. It was a good day of trade on Dalal Street because of the big news coming in on the ceasefire and the Iran-US peace deal, and that is something that the benchmarks really cheered today. Nifty topped 24,000 levels but settled around 23,900 level, while Sensex ended with 1% gain today. Even the broader markets, they mirrored the gains of key indices with value buying seen in both mid and small cap counters. Let's take it over to Parth, who's standing by with the full picture of the market action today. Parth, tell us.
So Nifty has closed in green, up almost 1% today, led by Trent and Shriram Finance, both of which were the top gainers in the index seeing an uptick of over 5%. The broader markets have, however, outperformed the benchmark today, with Nifty Midcap 150 ending in green, gaining almost 1.5%, and Nifty Small Cap 250 also ending in green, gaining almost 1.2%. Kalyan Jewellers India and Balkrishna Industries were the top gainers in Nifty Midcap 150, both of which saw an uptick of over 9%, while Aarti Industries and Schneider Electric Infra were the top gainers in Nifty Small Cap 250, gaining over 10% for the day. Now moving on to the sectoral side, we saw all of the sectors end in green except Nifty Pharma. Nifty Realty was the top gaining sector, up by almost 4% today, led by Prestige Estates and Phoenix Mills, both of which gained over 5% for the day. On the other side, Nifty Pharma was the top losing sector, seeing a downtick of almost 0.6%, led by Aurobindo Pharma and Ajanta Pharma. Aurobindo Pharma was down 4.3% today, while Ajanta Pharma was down almost 2.5%. Now, lastly, on the sectoral trend side, we saw Nifty Pharma snap its two-day gaining streak, while sectors like Nifty FMCG, Nifty PSU Bank, Nifty Financial Services, Nifty Oil and Gas, Nifty Metal, Nifty Auto and Nifty Realty were ended in green for the second day in a row. Nifty Bank has also ended in green for the third consecutive day, while Nifty IT finally managed to snap its 8-day losing streak.
All right, Parth, thanks so much for getting us the full roundup of the market action today. Now, speaking to NDTV Profit, Samir Arora, who's the founder and fund manager at Helios Capital, said that the Indian market has held up relatively well over the past 2 years, despite the global uncertainties and also intermittent volatility. Listen in.
Actually, the Indian market did not do very badly last 1 or 2 years. Considering that the previous years were good, what made it painful for everybody was that Korea has done very well and Taiwan has done very well. In itself, 3-4% down, 5% down this year, or whatever it was before today, is not the end of the world. But if you see Korea up 90%, it makes everybody upset.
All right, focus on one big corporate development of the day, and Vedanta Group is in focus as the 4 demerged entities, that is Vedanta Aluminium, as well as Power, Oil and Gas, and Iron and Steel, made their stock market debut today as 4 separately listed entities. My colleague Riddhima spoke to Anil Agarwal, the founder and chairman of Vedanta. Listen in to what he had to say about the company's target for producing steel in the coming years. Listen in.
It is very important to produce more steel. So we are going to produce 15 million ton lowest cost of steel, which is also a special steel, electric steel, high carbon steel. Very excited. So I'm talking about each company with tremendous value, 15 million ton. And going forward, we have to do 50 million ton. Because India need, we cannot depend on the import. So then you look at the power. Power is very important.
For the next 5 years, you were saying
3 years, 15 million ton.
All right, and a key development on the India-US trade front. Well, Commerce Secretary says that a USTR delegation will be visiting India on 22nd of June, with official talks scheduled for 23rd and 24th of June. In fact, my colleague Shrimi shares all the details of what's on the agenda and why it's important for us. Shrimi, tell us.
Well, the India-US trade deal appears to be moving into a final phase at a particularly important, moment. Commerce Secretary, Rajesh Agrawal said a USTR delegation is scheduled to visit India on June 22nd, with meetings lined up with Commerce Ministry on June 23rd and 24th. Now, the expectation is that the visit will help resolve the remaining issues and put the final touches on the proposed, India-US agreement. And the timing is, of course, noteworthy as geopolitical tension shows sign of some sort of easing, and hoping of a sustained peace deal emerge, securing the greater trade, certainty through a bilateral agreement with the US could prove crucial for both economies. Now, a successful deal would not only provide stability to businesses, but also strengthen the supply chain and investment flows at a time when global trade remains uncertain. On the USTR Section 301 investigation, Agrawal underlined that it's a legal process that will follow its own due course, and India has already made its submission in this regard and will continue to engaging with US on this particular matter, and emphasize that trade deal covers the entire gambit of bilateral trade issues, with both sides working through the remaining concern. With another round of high-level engagement just days away, officials are increasingly optimistic that India-US trade pact is inching closer to the finish line. And as Piyush Goyal, Commerce Minister, highlighted some time ago, that they are hoping to sign its first tranche by July.
All right, thanks, Shrimi. Important details coming in there. Moving on, well, Noida International Airport received its first landing with an Indigo flight arriving from Lucknow. As commercial operations begin, Noida Airport's leadership says that the flight frequencies will be ramped up rapidly. In fact, my colleague Danish spoke to the airport's top executives on the sidelines of the inaugural event. Take a listen.
Well, we have been joined by Ms. Neetu Samra. She's the CEO of Noida International Airport, and Mr. Christoph Schneelman. He is the Vice Chairman of the Noida International Airport. Many thanks for giving us your time. Finally, we are seeing the operations at the airport have kicked off. What is your plan to increase this domestic ops, ma'am?
Thank you, and a very warm welcome to you at Noida International Airport on this important day of ours where the commercial operations have just started. So as in June, we will be starting with 12 flights a day, and then in July, we'll be adding multiple more destinations, and the flights will increase to 42 flights every day. And then from there, slowly the ramp up will happen, and by end of the year, we expect that around 4.5 to 5 million passengers will be flying through the airport.
So what about the international operations? When can we expect the international operations to begin?
So today was a goosebump moment for us as we started domestic flights at Noida International Airport. We hope for another goosebump moment later this year. So the plan is to start international operations later this year. We see a lot of interest from Indian carriers to serve international destinations from Noida Airport, and likewise from international carriers to provide air service to here.
All right, the Dharavi redevelopment project has taken another step towards on-ground implementation, with the BMC really beginning to issue notices to Shahunagar residents to vacate their homes for redevelopment work. Around 900 BMC tenants residing in Shahunagar will have to really temporarily relocate. A government official said that those opting for the transit accommodation will be allotted homes in MHADA buildings in Sector 5 of Dharavi. Around 500 MHADA units have already been kept ready, and the latest action can be seen as a defining push after Chief Minister Devendra Fadnavis' recent directive of making 10,000 homes available by the year 2028. It's a mammoth project under the government. All right, with that, completely out of time on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back.
Hello and welcome to KYC with me, Sharad Dubey.
And interestingly, I've got you an interesting company here. But before that, I'm going to give you some hints. Try to understand which company I'm talking about. And yes, the space is quite limited. It's an agrochemical company listed in the year 2007. Also, the stock has been doing well. From March lows, it's up 36%. And interestingly, the company will be in focus, especially to be impacted by El Nino. There is an impact analysis here as well. But to put things in perspective, HDFC Mutual Fund also has a 9% stake in the company. And the company in focus is going to be Insecticides India. This is the company which we are talking about. But why are we calling this company? That's the main question to be asked. Key questions definitely going to be on the El Nino impact. What happens to the industry, the agrochemical segment, and also overall for the company. These are the key reasons why we are getting this company. Apart from this, also we'll be definitely going to be looking for the volume growth, demand trends, and all these impacts which should be coming in. If we could show the second question, why we are calling this company. Iran-US deal is final. Now, will the global disruptions reverse or will it take some more time? This is very much important. Almost 10% revenue comes from the exports and the further product launch pipeline, especially with the global tie-ups. That's what the street is looking at. The growth and margins outlook for FY27. Will there be a kind of an impact or it's all fine? B2C products, especially the way they move to the premium segment, that's what we'll try to understand how the things will pan out. Update on the upcoming facility in Sotanala, it's in Rajasthan, on the capacity expansion as well. And of course, Rajesh Agarwal, MD at Insecticides India, will help us decode all these queries. But let's try to understand what's the company all about. ये company करती क्या है? Insecticides है, but insecticides में बहुत और varieties होते हैं. We'll go in that. It's a crop protection and the nutrition company. It was, of course, having 20 plus technical products and 130 plus formulation products. And if you look at it, the manufacturing they have are spread across, especially in the northern part of India as well. This, of course, includes Jammu Kashmir. Almost 70,000 million tons per kiloliter annual formulation capacity the company is having. And also the upcoming facility is in Rajasthan. Apart from this, let's go into further details about the company. They have a technical synthesis plant at Chopankai as well as the Dahej. Also, looking at how they are moving around, it's a pan-India reach they have, especially on the distribution front. I'll explain you the moat of this company. And this is what the overall expansion looks like when it comes to the distribution and reach. Apart from this, they have their own tractor brand. It's almost a 40-year-old brand which the company has. And it's exporting to 22 countries and they have 182 international registrations. So that's something you should be noting it down as well. There is an export angle to it as well. The revenue breakup, how things look like. Insecticides, it's around 49%. Herbicides, fungicides, that's on the lower side. But overall, it has the entire gamut for agrochemical space. Also, the revenue share, if you have a breakup between the premium and the generic, that's what you get. 58%, 42% for the generic segment. But let's get into a little bit more detail about the revenue share of by the segment that we have is B2B, B2C. That's where the most of the segment revenues are. That comes in roughly 73%. So this is how we have given the overall sales segment. But what may work for the company, that's pretty much interesting. It's an export-oriented setup. So that is where we are looking at some kind of a bullishness. Expansion is also at play at 2 of its projects. Also, the third point, which may be in the favor of the company, is the shift towards the premium product mix. So, of course, we will be looking at that number as well in future. There is, of course, some key acquisitions coming in the upstream efficiency, and how much that builds up in the margin outlook is something which we'll be watching out for. And also, if you look at what may not work for the company is this. This is a very important, factor which is coming in. The second important reason where things might not go right for the company is a lack of analyst coverage. Only one analyst is tracking the stock despite giving 100% buy rating. And peers do enjoy a premium valuation. Why there is a discount? We need to understand that, and I'll get you those details as well. So this is the entire picture for Insecticides India, but let's try to understand the KYC ratings which we have in our show. This of course includes the income statement, balance sheet, cash flow, return ratio. Then if you look at it, there is shareholding, how much stock has moved, kitna paisa stock mein bana. I'll get you the valuations as well as the overall outlook for the company. But let's start the income statement first and see what's happening there. Largely, we see the revenue number has not been that strong. The 3-year CAGR has been in single digit. Little bit of up moves definitely coming in PAT and operational numbers, but it kind of negates because of the top line growth. But let's see what's happening in the margins front. Overall, the margins are being maintained. It's at least 10% or plus. So that is where a little bit of strength is definitely coming in. So to put things in perspective, I will give this a neutral rating. Let's go for the balance sheet, and largely the numbers are very, largely it's debt free. The borrowing numbers, if you look at it, that's on the lower side. Cash balances, if you talk about it, they are at decent levels as well. Balance sheet management is decent. Even the working capital ratios I checked, it's neutral or normal. So that's what my view also comes in when it comes to the balance sheet. So we spoke about income statement, we spoke about balance sheet. Let's talk about the third point, cash flow. Of course, there is some seasonality at play as well, but I've taken the fiscal years here and they have done decently well. Of course, FY24, there was a higher numbers coming in, but that's where the seasonality or the cyclical nature of the business comes in, and largely it has been decent. So I've given this a neutral rating as well, giving a benefit of doubt on my analysis. Also, let's talk about the return ratios. Largely, it has been decent. There was this downtick of 10.4% from 16.7% in ROCs, but then it has been a good, you could say a good up move, and it's maintaining a slight decline coming in if you compare with FY25. But net, the story remains strong and it's neutral. It's on the recovery path. It's almost getting back to its FY22 levels, and the same story is coming in for the ROE as well. So it's a neutral rating when it comes to the return ratios. Shareholding, there's nothing changing at all over the last 2 to 3 years. And look at that, FIs, their stake has remained 4%, DIs hasn't changed, so has the promoter stake not changed. That means no change in the flows right now. So to put that in perspective, I'm going to give this a neutral rating. But let's try to understand, has the stock actually made money for the investors? That's where we come in for our analysis. Let's pull out what has happened. From March lows, the stock is up 36%, fair enough. There was a good uptake from most of the stocks. But the concern is from 2025 highs, and from last 1 year, the stock is down. One is down 33%, another is down 21%. And the last 5 years, if you are a really long-term investor in this company, it hasn't made much of the returns. It's just 41%. The average is just 8% a year. So definitely there is a big concern here, and that is why I'm going to give this a thumbs down when it comes to the street cred. Now that question was, why is the company trading at a valuation which is at a big discount to its peers? Insecticides 12-month forward P is at 15 times. Compare that with UPL and PI Industries. There's definitely all of them are at premium with them. And remember, there has been a derating in agrochemical by almost 30 to 50%. Same thing happens for Bayer Crop and Rallis India. Look at their valuations. That's around 28 to 27 times. But just 15 times. Does it make it the cheapest agrochemical stock? Yes. But why is it trading at such a significant discount? That's a little bit of concern for me. So I'm going to give this a neutral rating right now. But of course, the cheapness is there. So maybe this can give a good risk reward ratio. So of course, this is going to be a thumbs up for that. But let's talk about the outlook, what's happening here. El Nino impacting Indian monsoon, and that's a very important negative point for the company, at least in the inventory adjustments. 90% of revenue is still domestic. The restricted field activities and global disruptions, that's also happening. So there are second order effects, but the company is shifting towards more premium products. They are looking after something in backward integration. So at least they'll try to offset the margin impact, and more international tie-up and announcements for the future. That's pretty much interesting. But as of now, it's even Stevens when it comes to the outlook. Let's try to understand the total final KYC ratings coming in for the company and where does the company stand. Income statement, balance sheet, cash flow, return ratios. There are some negatives, there are some positives, but they are balancing out. But my concern is there definitely in the street cred. Valuations, however, have turned attractive, and that's why I've given this a thumbs up. Nothing major happening in shareholding, but outlook, the concern is the El Nino. And how does the company fight that against the industry tailwinds? That's the big question to be asked. But the overall KYC rating for my analysis is 4.8 A out of 8. So that's the rating coming in. It's largely in line to slightly negative what the numbers we generally give in KYC. So I've given you an entire perspective. But let's try to understand, up next we'll have Rajesh Agarwal, MD of Insecticides India. He'll be talking about the company's growth plans. He has been the MD since the year 2006. And interestingly, the company got listed in the year 2007. So he has been there all this while. He's the Vice Chairman of the Crop Care Federation of India. And one interesting tidbit about him is, of course, he will give us a lot of views and views for the company and the industry as well. But time for a quick break. On the other side, we'll be speaking to him.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Award.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Welcome back to KYC, and now we are joined in by Rajesh Agarwal, the Managing Director at Insecticides. Good afternoon, Rajesh sir. It's always a pleasure to have you with us at NDTV Profit. But a little bit of concern is coming in for the agrochemical players. The El Nino impact which is there. Of course, there is a little bit of disruptions, but wo purani baat hai. But right now, El Nino, that's a big concern coming in. And as an industry spokesperson also, I just wanted to understand how does it impact your industry and your company as well.
Rain god plays a very important role in our industry. Particularly, it boosts up the sentiment of the farmer. He prepares for the new crop and he is very, very confident when the good signals of rainfall are there. And at this moment, yes, there is a slight delay in the rainfalls, but still the country is divided into various parts, and so is the role of the rains. Because if we look at North India, here rice is the very big crop in wherever the water is available. It may be all the geographies of Punjab, Haryana, UP, going towards even Bihar. So in maximum parts where the rice is sown, there the impact is just to a level that yes, they need water. So the ground level groundwater plays a very important role here. But yes, the rains, of course, they boost the sentiment of the farmer and they give the growth to the crop. The risk comes in when it comes to the dry crops, particularly cotton and pulses. And there are some switches in the northern part of the country. In central part, yes, the soybean cotton ratio, the pulses ratio, that keeps on changing, even the groundnut, depending on the time of the monsoon. If the monsoon gets a delay, then there can be shift from one crop to another. So we are very much prepared, looking at the seasonal situations, looking at the overall farmer sentiment. We are working on the rice products, we are working on soybean product, we are working on pulses products. So we are working in all the directions.
Right, Rajesh ji, what about the growth and the margin outlook, for the business for FY27? How things look now?
We have been very aggressive in this year because this is the 25th year of the company and we are looking for a decent growth. So I can at this moment tell you that we will of course be having a double-digit growth, and there will be some evidence in this quarter itself. And yes, how the monsoons come in and how the things are there, it is going to create an additional impact. But still, I am confident that we should have a decent growth in this year.
Decent double-digit growth expectations. Rajesh ji, Iran-US deal is almost final right now. The global disruptions, they are expected to bottom out. How does your, export business look like? It's just 10% of revenue, but things will become better now?
It is improving day by day because we are getting more registrations, and we are also working for some contract-based businesses. So as we get these registrations, this business will go up. At the moment, the contribution is small, not even 10%, and but we have a vision to reach 10% in 2 years' time. And I'm very, very confident that we should have decent growth from the export business as well.
Right. And how's your product launch pipeline looking like, Rajesh ji, especially with the global partners? A lot of announcements coming here.
Yes, we have partnered recently with Corteva and we have launched 2 new products in this season. And there are further few announcements which are on the way by our own R&D center and through our partners also. And we expect to launch one product from Nissan also by the end of this year, which will be available for the next Kharif season. So that will be again, there is a lot of product basket and we'll keep on launching the products in Kharif and Rabi season.
Right. And Rajesh ji, talking about the upcoming facility in Rajasthan, just wanted to understand a little bit, about how things are going to move ahead and, regarding your capacity expansion as well.
So Sotanala is a 2027 target. Last year we have completed Chopanki. This year the entire focus is on completing Dahej expansions. Though we have started manufacturing partially in Dahej, but the vision is that we should come in full swing by the month of July, and we should take the maximum advantage of the Dahej unit. And now the Sotanala comes in. Sotanala, we should start the formulations by the end of this year. And the target is to catch the technical synthesis in the next year, in the next Kharif season actually. So which will be again the same time, May, June of the next year, we should hit with the technical manufacturing start.
Right, Rajesh ji, that's a very interesting 360-degree outlook you have given across our questions. But the B2C segment, where you are moving towards the premium segment, a bit of high margin segment, how are things looking like? Have you earmarked any kind of a capex or expansion for that? What's the outlook on this front?
We have strengthened our formulation facilities at all the places. When I say all the places, in Dahej, I have put up a new formulation unit, which will be fully functional by this month end. And again, in Sotanala, we are setting up a new formulation unit. The idea is that a lot of new generation formulations we are getting, particularly water-based formulations, wettable granules. So for which we have done a major expansion at both the sites. And the vision is like we divide the insecticide and herbicide in the 2 plants, and we improve our capacities so that it's not only for our brand, but for also B2B segment, we are able to cater to the demand of the people.
Rajesh ji, it's always a pleasure to hear you, and also for your company's growth prospects going ahead as well. Hopefully El Nino doesn't impact the agrochemical industry in India. It's always a pleasure to have you with us. Thank you, sir.
Thank you very much.
Yes, so that's of course Rajesh Agarwal, the MD of Insecticides India. Concerns are raised, especially on the El Nino impact for the entire Indian agrochemical industry. But is the company doing something more? That's the key question which we have tried to answer in this interesting episode of KYC. So stay tuned to NDTV Profit.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you're truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's a good time to be looking at your portfolio, isn't it? With the announcement over the weekend that we might just be heading towards a cessation or an end to the conflict in West Asia. Let's hope that is indeed the case. But today I'd like to talk to you about an instrument that you can use to diversify your portfolio. And this is actually something that a few fund managers are looking at closely as well. And that is the real estate investment trusts. What do you need to bear in mind when you're investing in this? From the